I'd like to invite Shane back up to the stage, and I'd also like to invite Jennifer Richards, the CEO of Aon Australia, Andrew Hall, the Executive Director and CEO of the Insurance Council of Australia, and Ben Vessel, the Chief Broking Officer at Austbrokers, to join Shane up here as well. Thank you everyone for joining me up here. I'm going to ask a question to all of you to start with. Jennifer, I'll start with you. Just to set the scene, a very generic question, which is, what do you see as the key challenges right now facing the general insurance industry?
Great. Thank you, and it's wonderful to be here with you all. I'd start with a simple word, which is relevance. As we saw from Shane's presentation, that slide with plagues and pestilence and cyber attacks, our clients have never faced more extreme risks and more interconnected risks. And I think we sit in places of such great privilege. Clients have never needed us more. What we do has never been more critical. But I think with that, the challenge that we face is bringing in more relevance to our industry, and in particular, how do we innovate for tomorrow's challenges? How do we think about around corners? Clients are looking for us to solve two problems for them. How do we protect them against these emerging risks? And how do we help them grow their businesses? And I think our industry really has to think about how we lift to that challenge, create more innovative solutions, new solutions that solve the problems that we heard from Shane today. And I think that's really the challenge for our industry right now, Gemma.
Very comprehensive answer. Thank you, Jennifer. Andrew, what could you add to that?
Thank you. I mean, I think the critical challenges are around meeting ongoing changing community expectations and doing that from a basis of trust. As Shane mentioned, we are in an environment now where new benchmarks are being set all the time in terms of extreme weather events in particular, and then unexpected other events, cyber and biosecurity and the like. And the reality is insurers and brokers are selling a promise, and that promise is that they will put you back into a place you were before the unexpected happened, and that expectations continue to evolve. And when I look back on those videos that were played at the start of Shane's address, I'm reminded of the scale of the extreme weather events we experienced in the last 4 years in this country, when it jumps from about 30,000 claims in a system to 330,000 claims in the system. It's enormous and it smashes us all. But the reality is, and we'll get onto the reviews and the like, the community has an expectation that we're there to catch it, deal with it, and be able to service people. And I think that's our big challenge moving forward, because if we keep failing that test, we lose the trust of the community, we lose our license to operate.
Shane, I'll come back to you in a moment, but I might direct the same question to you, Ben.
Sure, thanks. Yes, I think for me it's about maintaining the focus and not being distracted by all the things that are emerging. We've been around for hundreds of years. The industry has been around for hundreds of years. It's adapted well, it's embraced changes, and it's learned to move, create products. It's learned to support the various communities that we are all involved with. Sometimes the incoming can be overwhelming in terms of regulation, in terms of weather, in terms of emerging technologies. And I think the industry is served well if it embraces the change, but maintains the focus and is not distracted by it, but embraces it and adopts to maintain relevance with our customers.
Ben, thank you. Several of you mentioned the concept of trust and making sure that customers and consumers know what they're getting and representing value to them. Shane, let me ask you from your perspective, when you see communities who are in the throes, their lives are at risk, their homes might have gone, insurers is something that's not the very first thing on their minds, but knowing their psychology and how they're feeling at those particular points, what can insurers or brokers learn about how to address consumers and work with them?
I think it's been hinted at already here. I think people put a lot of trust in procuring a policy, believing that they'll be okay. They've done the right thing procuring a policy. I think the relationship challenge comes when the consumer finds out that what they've secured doesn't adequately cover them. So how do we make sure we're effectively guiding and ensuring that people, particularly taking out coverage policies, and I'm not an expert in the space, so pardon my language, in good faith, how do we make sure that those people are getting that trust and confidence right. If people choose to lower things and say, no, I'm not going to do that, that's entirely their call. But I do think, and it's that relationship. I know just recently I took some insurance out on a new business. I started a business and I needed some different insurance policies. And I was referred to somebody based on their existing trust relationship. They don't advertise. I went to them as per the referral, and I had a really personable conversation. I was guided. I thought, now they could have been bluffing the hell out of me, I don't know, but I felt that I was being confidently managed and advised on what I needed and what was best and what was fair and all that sort of stuff. That relationship, and I think that brokers have that unique relationship, is a special one that is formed, and people put a lot of trust in that relationship. And when things go horribly wrong, they're going to go and connect with the person that helped them out to make sure they're on track and doing what's right and where to from here. The last thing people often think about, well, actually I see very ends of the spectrum. You see some people, when you see their whole world just in piles of ash around them, you say to them 48 hours afterwards, oh, I've been on the phone to my insurance company, I've got this, I've got that, and they are just on point, they're going, and I'm thinking, well, do you actually realise what's happened here? And then you've got others that will often take 6 months, 18 months before they're willing to have a conversation about what they've just been through and what they need to do. So it happens at such a very broad scale across the community sector.
Ben, we heard about just now about the importance of relationships, and you yourself said don't be distracted by shiny new toys, but it is quite hard to escape AI and automation and the promise that that holds. What's the right balance to strike between doing things as we've always done them and introducing AI and automation?
I think it's an exciting time for the industry and the world. I mean, AI is being talked about in every second conversation in dining rooms or in offices or boardrooms. In our industry, from my perspective, it's a matter of balance. So it's embracing the technology. It's going into the use of it with eyes wide open. And there are different forms. So there are tools and technologies that enable us to be much more efficient. We can absorb data much more quickly. And many people in the room here are using it today in different forms, through to sorting out emails and spreadsheets to fine-tuning documentation. The generative AI is becoming more and more interesting, and I think we'll start to see more discussion. There already has been, but more discussion on regulation, particularly as this notion of high-risk data and analysis comes in, and how that affects pricing, whether it's health insurance or just general insurance pricing. So that's occurring as we speak. But as we've heard a couple of different themes already this morning, the notion of relationships and empathy and communication is still paramount in our industry. Utilising technology to create efficiencies, very important. But at the end of the day, we're dealing with humans. We are all humans. And that interaction and the importance of advice and conveying that advice in a manner that fits the purpose of the customers we're dealing with is still going to be, in my view, the most important component of how we do business. It's the relationships and the communication.
Jennifer, you mentioned relevance earlier on and saying insurers have never been more relevant to people and more essential to businesses. But there is still quite a lot of sticker shock when people see premium, and we understand the reasons for why premium are rising. How does the industry do a better job of communicating the inherent value that's there?
Yeah, I think I was just thinking about when Ben was talking before, I think a huge piece of this is transparency. And being really honest with our clients as to what is driving with the particular environment that they're in, whether it's a property discussion, a cyber discussion, a liability discussion. And I think particularly leaning into those conversations with a high degree of transparency, not shying away from the discussions. I think so frequently people will be apologetic or, look to say, oh, well, it's not that expensive, because I think that does not create trust. I think the element of trust and transparency is that the more data that we're able to give clients to support why a price is what a price is, or why a coverage is what a coverage is really critical. And that's why I get really excited about the age in which we live, right? We are able to drive so many more rich discussions around analytics, data that supports pricing models, availability in the market for different options. I was recently in Chicago where we were demonstrating for our board some of the new analytic innovations that we've developed. And it was so amazing to be able to watch on a real-time basis, changing retention levels, risk appetite, and being able to see real time how the market would respond to different variables. And I think that's the sort of stuff that engenders trust in people, is because we've got supportable facts that support an outcome. And I think this day and age that we live in is just so exciting for that reason. It takes away a lot of the mystery around our industry. So frequently in the past, clients would say to me, oh, it seems like a bit of a dark art. And I think the more we get away from the dark art, the better for our industry and for our relevance.
And if we think back to the map that Shane put up of the horror situations of COVID and fires and floods, etc., it seems to me they've pretty much all struck since you've been in the role. You might not have taken on the job if you'd known that. But anyway, it's put you in a great position now to talk to us about how the insurance industry has evolved in light of all those disasters. How has its perception of itself evolved? How has your dealings with regulators or government and consumers changed?
Yeah. I often tell people my next job is going to be working in nuclear energy, which is getting more interesting by the day. I think the industry is definitely evolving, and I'd say when I came in 2020, it was mid 2020, and it was in the recovery after the bushfires, and then the rain started and didn't stop. But the industry was very open to saying, what do we need to do to improve? Now, we have made progress. It doesn't feel like it, but I believe we are making good progress, but we've got a way to go. We've now got a report from the House of Representatives with 84 recommendations. We've got an independent review of the Code of Practice with another 104 recommendations. There are various other inputs at the moment that have come from ASIC, our regulator, APRA, AFCA and others, and working groups that we've got. And when we stand back and look at it all, there are three areas that the industry is essentially focused on. Number one is consumer outcomes, and contained within that is a maturity of understanding vulnerability. I think, like the word resilience, vulnerability is also overused, and no one actually understands anymore what it really means. But the interesting thing in the world of insurance is that you've got traditional vulnerability, which we all understand. That is, people in elderly, disabled, or maybe domestic violence situations and the like. And then we have people who are impacted and businesses impacted by a natural disaster. And they're considered vulnerable as well. Our task needs to be to understand how does your systems and processes flex to cater for large-scale, disrupted, impacted, traumatized people without bringing in variation to process that then results in poor consumer outcomes. So consumer outcomes, number one, that is the thing that insurers are working through. In working through that and all the recommendations we've got, how do we do it to keep premiums affordable? And so the second bucket is a lot about what coverage should look like. And I guess the high profile things are the flood homes, where their premiums are now at $30,000 a year and the like. Industry is working with government on a task force around that at the moment, and we hope to be able to talk about that more in coming months. But that goes all the way through to when I buy my home insurance policy, which is generally not via a broker but online and direct, and done at scale because we're not financial advisors, and it costs money to introduce that level of advice. How do you give people all the information they need, like what is the sum insured of their property and the like? And then the third outcome is this issue of resilience and mitigation. As we're learning more and more about the country we live in through these natural disasters, through things like the Hazards Insurance Partnership with the government that we've got, where insurers are now providing a lot of data to government and they're working up their view around catchments and the like, governments no longer will be able to say, we don't know where the disasters are going to happen. We will end up in a situation where governments will be very empowered to know where people are living that is dangerous and unsafe to be, and also at the end of that, uninsurable, particularly as data becomes more granular. So I think politically, in the political discourse, the penny is dropping that there's actually now a time frame for governments to start changing how it's investing its money in countries like Australia to make sure that homes and communities are sustainable and durable for what they're going to face.
I might ask Shane to jump on and give any insights he has from working as part of the government
Oh,
that you can share.
I would echo Andrew's comments absolutely. And I remember when I first moved into the disaster recovery responsibility area, we were having some really good traction with building things back better. So we were calling it betterment. So, Einstein's definition of stupidity is doing the same thing over and over again, expecting a different result. But our funding structures were such that when governments were negotiating between themselves, between state and Commonwealth, the policy remit was you would build back what was there. Instead of taking a 10%, increase in the rebuild cost, so you might raise a bridge, a metre to deal with 80% of the low to moderate flooding that disrupts community. And instead of building it out of timber again, we might build it out of concrete and steel so it doesn't burn down every time there's a bushfire, right? So they went on a program and agreed to do that. So I was calling it betterment. But then I was told that I can't call it betterment because the policy structure doesn't use funding for betterment. We've just agreed to some rebuilding standards. And can I start using different phraseology? And I thought, wow. But now it's really pleasing to see the word betterment, the investment, the policy architecture is recognising the need to rebuild wiser and better than what was there before and take the time when it's displaced. I think what we've got to do as governments, and historically one of the big challenges is governments at different levels were waiting for disasters to do all their building and maintenance, which tore down the concept of the cooperative funding model, because when people are supposed to maintain and keep things at certain levels, not wait for a disaster to then to do all their building and maintenance work. So it's
Sound like an insurer.
well, it's actually, I think it's meaningful better. If we've got a minute, I wouldn't mind just saying one thing if I can. I can understand all the narrative why it's very externally focused on clients and community. But I think the other thing that the insurance sector has done well, in my experience with colleagues in the business, is looking internally as well. So when we're living and working through these really difficult times, not only do the teams, the staff, the personnel, not only are they invariably directly affected by what's unfolding with their clientele, because they're ultimately clients themselves, but even if they're not directly affected by that particular event, they're enduring this vicarious trauma by their interactions and their connections. And I just can't overstate the value of an organisation like NIBA that provides a network of peers and supports that not only do you continue to grow and develop best practice right across the sector, but you've got an industry of peers that you can open up to and talk to and seek support and assistance from when you're processing all these things. And the more we open up and talk, the more we realise we're normal human beings going through really difficult circumstances, personally and with others.
Thank you for that very positive comment. I'm going to actually bring up quite a negative topic right now and move on to that. So, Ben, let me ask you, a lot of
I love
younger
the negative
people...
topic. That's okay.
He's a broker. We talk about good things.
That's what I'm asking him. A lot of younger cohorts, particularly, if you look at various spending surveys, are giving up on insurance outright. It's a cost that they feel they don't need and can do without.
Yes.
It might be more okay if you're a bit younger, but you don't really want that to carry through your life as you get more assets and you become more vulnerable from a health perspective. How do you re-engage that community that doesn't automatically think insurance is a necessary and relevant part of their lives?
It's really interesting, and it is a challenge. I mean, the views or the notion of assets and values and what's important flowing through to things like employment and owning a home. I mean, they're dynamics that are definitely changing and are much more topical. It's part of what we should be doing as an industry and advising and engaging with different segments of our customer base. I don't think we pretend to know the answers, but in order to get the answers, we need to embrace that group of people and learn from them and help us develop product. Probably even more importantly, how the best ways to engage with them. And I think we've got to be much more open-minded. And this gets to the theme of the conference around, where we've got to today has been great, but how do we adapt and engage? So we talk about resilience and communities and risk and those words that are sometimes overplayed. Often that type of language is missed by a whole generation of people that don't think like that. It may mean different things to them in different ways. So how do we engage with an emerging group of the population that is engaging differently with assets and goods? Some of the products that are around and the notion of embedded products within consumables, that's an interesting part of the world. When you buy something, insurance is embedded. There's pros and cons to that. That could be something that segment is more engaged with from an insurance point of view.
I think I'd ask Andrew now, like what you've seen that really works from that point. You obviously have oversight over many different insurance companies. So to build on Ben's points, anything that you think is very successful in terms of engaging disengaged communities?
I think so. I mean, maybe travel insurance is a good example. People suddenly focused on it when COVID happened. COVID struck at a time when global air travel and the like had reached its global peak. And so everyone was traveling always. And I think that was, among the knocks we all had was suddenly not being able to travel, but also all the trips that had been booked and the disruption and all that sort of thing. And people's interest peaked in travel insurance. It's a classic product that is embedded in people's credit cards and the like. Australians love embedded insurance. Medicare is effectively an embedded insurance product. You just don't think about it because the public system's there to fall back on. And survey after survey we do, particularly younger cohorts, of people go overseas without any travel insurance because they just have this assumption that something's embedded somewhere and it's going to be there for them. So we do spend a lot of time around in the lead up to holidays having these discussions. It's always the worst thing when I have to, do the radio interviews and remind people that a GoFundMe page is not a solution for coming home from Bali when the worst has happened. You really do need to just spend that extra moment when you're booking your airline ticket to book your travel insurance. So I think that is one example. I think more broadly, we're in a lot of discussion with the banks at the moment around your home contents policies and your home. It used to be the case that the banks would check annually your certificate of coverage. Now, and I used to work in a bank, I understand why it dropped off. Banks' views around lending changed, that they were lending you, the individual, and your ability to repay a loan, not against the value of the property. But I think the last 4 years have demonstrated that that is not the correct thinking, and that insurance has largely carried all of that risk for the banks now over a number of years, and I think that interaction between insurers and banks needs to adjust, and I think people need to be getting access to the right information to make sure that their policies are in force and that the sum insured is correct and that their excesses are set at something that is realistic for them as a household.
And Andrew, I think there's an interesting lens on that just vis-a-vis our industry in terms of brokers and advisors. We've been doing a huge amount of work with the banks around taking a lot of our reinsurance data. We've got really rich reinsurance data around hazards and catastrophes, and really helping them to inform their view around what their mortgage portfolios look like, to really use that insurance data to help enable them to drive better decisions vis-a-vis where they're lending and to create a more sustainable environment for insurers at the end of the day. And I think we've got to lean into that as an industry as well, because we do have these rich sources of data that we can use to help inform some of those decisions and create a healthier ecosystem.
Jim, sorry, no, you go first.
Sorry, could I just, again, back to your point around the sort of perhaps generational view and changes on things. I think the industry is also starting to focus a lot more on recruiting people into, the ICA, NIBA, lots of organisations here are also investing in recruitment, in training, learning and development, and attracting people to the industry that may otherwise be going somewhere else, in part to make sure that we're staying contemporary with what's going on. That's really important for the industry.
And I would also add, and I don't know where Andrew's on this, but I think with those things like GoFundMe accounts and, you know, unparalleled government assistance programs and other big community generosity programs, there's this delicate balance of needing to do those sorts of things, but not create an environment that disincentivizes the need for insurance. You know, I don't know if I'm explaining that clearly, but there is
That's correct.
some of the packages of supports that I saw governments want to roll out just over the last 5 years are things we've never done before. And it was like, why? You know, what? I mean, I'm not being insensitive. I'm genuinely not. But it's, first of all, it's like, why? Like, really? And then now you've done it, the precedent is set. So people then expect, well, I'll be all right next time it happens. Last time they did this, and, you know, it'll only get better. You know, like, we've got to be really careful on how striking that balance is. And there's all sorts of drivers to that. There can be local identities, there can be election timing cycles, there can be all sorts of reasons why those things become really, really interesting.
We are running up against the clock. I do want to ask you though, Jennifer, because you're also on the global executive leadership team for Aon. You must have incredible insight into what's happening globally, whether there are any trends that are very germane to what we're doing here in the industry.
Yeah, I think the good news is a lot of the issues that we talked about today are global issues, and we don't need to solve them alone, right? I think the global insurance markets, the global environment in which we operate, is really there to help us understand more of these issues. I was actually just grabbing a coffee in the exhibitor hall, and I ran into one of the global insurers who's here. And so you can see the relevance in terms of that was a cyber insurer by way of example. Cyber knows no geographic bounds, and so I think we need to remind ourselves that it is a community. And I think there's some really amazing stuff that the global insurance market's been able to help us solve, just in terms of, you know, we've talked about weather. One of the things I've been really interested in recently is geopolitical issues, and we had our president in town last week, and he was talking to us about the work that the insurance industry has done around rebuilding the Ukraine. We announced a $350 million essentially package that we had structured in support of rebuilding the Ukraine. And it was really born in the fact the US government came to us and said, listen, we want to help rebuild the Ukraine, but we don't want to just write a check because that's not sustainable. It doesn't help recreate a market. And so what we did was we structured as insurance in order for us to get local insurers on the ground to be able to write the political risk and other coverages that were required in order to create the trust and confidence to build back schools, hospitals, and the like. And we did that through reinsurance, and the US government stood behind that. And now we're working with France and Canada and various other countries. And I look at that and I think, when I talked about relevance before, there's so much of which we are to be proud, right, as an industry, and the problems that we can solve with insurance capital. So those are the things I think that really excite you. And you look at some of the, you know, there's certainly been a lot of pain in the system with the floods and the storms and global warming and the like, but there's also an awful lot that we can do to drive social impact and create change, particularly in places like the Ukraine that really need our support.
You absolutely preempted my final question, which was going to go to the group. So thank you for such a great answer. I'm going to extend that out and just ask it to the rest of the group. What does success look like when this industry is thriving? What are you seeing?
Well, I mean, we want to see an insurance industry that's sustainable, that's profitable, that has high levels of community engagement and trust, and that can flex but maintain the standards it needs. And I think, to Jennifer's point and your question around the global connectivity here, this is not a unique Australian problem. Last week I hosted my Canadian and New Zealand counterparts here. We today have sent a letter off to CHOGM, which is meeting in Samoa. The King's going there, and an item on their agenda is insurance sustainability in the light of what the challenges are in the world. And I think we've got a lot to learn from each other, and we continue to make those relationships and take those lessons and learnings where we can.
Your area, mate.
Don't underestimate it. Look, I think when the industry's thriving, our customers are better off. So for me, it's advocacy, it's understanding the needs of our consumers, it's developing new products and informing the consumers how it's relevant to them. we talk about AI. I mean, the products that can evolve out of liability-related matters that would protect the users is astounding and exciting. And I think the fact that probably over the last 18 months or so, the industry segments have got together and are a much more harmonious voice, and there's power in that. And I think that shows the strength of the industry. But for me, it's continued to be advocates for our customers and clients, and the sustainability of all the things we're involved with.
Ben, we're going to pick up on a panel this afternoon your point about how do we rejuvenate the industry and keep encouraging young people to come into it. So it was a great thing to raise now. Ben, Shane, Andrew and Jennifer, thanks so much for being a part of the panel today. If you'll join me in thanking them.
Thank you.